Morning traders, Paul here with GammaEdge. Today is Monday, the 8th of August. Let's get started. The fine print. Pause your players, please. Read this. It's important to you, important to us. When you're done, hit that play button. The market model continues in the bullish mode. We have been tracking this day over day since it started. It's done very, very well for many of the members in the group. A couple key things to take away here. So this is the long term, what we call the ribbon. These are a series of moving averages based upon the cumulative tick. And what this is telling us is that the long-term trend remains upward. We are in a positive slope on the shortest, the red one, and the longest, the cyan one here. And when we see that condition, that's a go for throttle up. Now, it doesn't mean that it can't reverse, but what it does mean is that we are in a sustained uptrend. Other thing to look at here, this is the instantaneous cumulative tick, this white line here. When we see that above the ribbon, that's an intermediate bullish signal, and that means keep playing those long-term entries. Effectively, you want to try to enter when we get a little bit of a pullback. I've indicated some pullbacks and actually some reversals here where the signal has failed, and then we've gone into this long-term or shorter-term re-entry phase here where things are looking really good. So study this chart. A lot of information on here, a lot of good information for you to get back in. We're in somewhat of what I call a lockout rally, and when that occurs, entries are very, very difficult, and we utilize the cumulative tick within GammaEdge to help us get back on the long side. When we take a look at the SPX condition, I will note a couple things here. First of all, we are seeing a significant increase in the overall combo complex here of the zero. When that happens, we've got a shift upward overall in the overall complex. That's a good thing when the zero comes up. But also note we've had a reduction of the calls. Now, part of this is due to the zero DTE or the expiries that occurred on Friday, in part with the zero DTE, but just be aware there is a little bit of weakness developing in the SPX combo complex, led predominantly by what we're seeing here in the PM settled complex, what we call the SPXP. We did create our own symbols here to isolate both the AM settled as well as the PM settled. You can see that the AM settled is very steady, almost the exact same picture compared to the previous trading day, but you can see that we do have a slight reduction in the positive gamma on the PM settled and a slight increase in the negative. So just something to be aware of, something to track here. If we continue to see this reversal where we're seeing the green wing drop and the red wing increase, that means downside protections being added on a short-term basis, and we'll want to pay attention to that. That, of course, feeds over into the combo because the combo is the combination of the AM and the PM. When we take a look at the zero histories, this is a very, very good indicator just to give us a view of what's happening across the top. I've got the SPX. On the bottom here, the SPY, the Qs, and the IWM. IWM has been broken, but it is improving. The blue line is the closing price of the IWM, the Qs, and the SPY. The red line here is what we call the TGZ, or the True Gamma Zero. This is a price invariant zero. Also, the TDZ, the True Delta Zero, is a price invariant delta. And when we see these trending up, there's only a couple things that can move these lines up, the red line and the yellow line, and that is the addition of calls and closing of puts. So the way we calculate this and the way we move forward here, this gives us a very clean, unbiased view of what is happening to the overall structural complex. And when we see this happening on a day-over-day basis and being invariant of price, it gives us confidence of the big boys and girls in the AM complex, and then the shorter-term opportunistic folks all are playing on the upside here. So study these charts. If you have any questions, come into the Discord and ask questions. A lot of people there are using this, and it can be very useful for making sure that you understand the overall trajectory of the complexes. Key levels for today, I've mapped from the PM settled complex over to the combo complex here. You can see where that is. I still am somewhat surprised that we're holding the 4,000 level as both the call open interest and put open interest dominant level. Here at 4,000, it's been this way for many, many weeks, and you can see we've got just a huge level sitting there in the net. The other levels are mapped out here. The ones that we really need to pay attention to are right here, 3,900, 4,200, and 4,000. Those are the dominant levels with some tweaking going on around these levels. Very low expected move on a big picture, and you can see the equity spot was 41.45, which was the close on Friday. 0 DTE, we closed right at the top of a transition range in the 0 DTE. We see this all the time, a very, very balanced and weak overall 0 DTE for today, so the expiry for today, so the 0 DTE will play a role. COI for the expiry sitting up here at 4,200. 4180 is where moneyness really starts to shift in a dramatic amount here, and down to the downside, the 4085, 4080 to the downside become the other areas that we want to pay attention to. Of course, a drop through 4125 puts us back into a negative gamma regime, but with a lot of green deltas down here, I think we will find support as we go down. We're not seeing a sea of red here yet. The SPX combo, which is the AM and the PM, sea of green. You can see that here. I do want to bring your eye down here to the 4,000, 4,005 level. We do have mixed sign, but very dominant level at 4,000 on the positive deltas, with the 4,005 being that JPM 930, 46,700 short call sitting there, and that's what's given rise to this large number that we see here. This is an adjusted number. COI, POI sitting here at the 4,000 strike. This is just going to be a huge area of liquidity and a real battle zone. The entire complex moneyness will start shifting a dramatic amount around here, and we definitely want to pay attention to that. Now above 4,100, you can see that the deltas turn decisively green above that, and you can see where we parked on Friday right underneath this 4150, which is a major line in the deltas as well as the gamma here. So we're going to probably open up above this today. That's going to shift the moneyness equation quite a bit and really open up the door for 4,200, which right now is a plus GEX sign. I don't see us going down. We got a pretty weak transition, and you'll see that here coming up. So when we take a look at the structure, everything I just talked about, in addition to that, we've got this 1031 short calls at 4340 that are starting to show their head here. This is the positive gamma exposure for the structure up here at 4200, very large level. Here's the 4150 line here, and then you can see 4115, and we get a little bit of a nulling that's occurring here. So it would not be much of a surprise if we did pull back at any time that we could park in this area, because you can see relative to the structure around us, the gamma is fairly neutralized. If we do lose this 4100 level, I think it opens up some weakness down to where I was talking about earlier, that 4,000, 4,005 strike area, which is right in here. And of course, remember, this is COI and POI also for the complex. If we lose this area, you can see we decisively become net negative gamma below that. That's fairly significant. Dominant GEX, you can see relative magnitudes. Everyone's stacking up on the high side here. We are losing downside protection in terms of magnitude. That part of that is obviously because we're pushing northward here in the overall structure, towards that 4150. We closed right here. I didn't put it on the chart, but we closed right here on Friday. So we're right underneath this line. We're going to open up in this line, above this line, most likely today, and that's going to trap us in this area. So it'll be a real interesting play here to see how we bounce between or start pushing towards 4,200 and how low we bounce as we go here. So the summary for today, we're still in short-term up. I do think we're in somewhat of a lockout, so watch for those re-entries. I would suggest entering On the long side, sure, it can fail. We hear this criticism all the time, but there's nothing indicating that we're overbought. There is nothing indicating here that this has run too long. This is the definition of a lockout rally. So I would continue to play those long re-entries. If you're not long right now and looking to get in, keep your position size very, very small. The 41.15 we see as a null area in the gamma. We think this could be that safety area that I was just talking about, right in this zone here. 4100 is that last dominant positive strike. Below that we slip towards the transition, and we think that the upside target is 4200. So that's it for today. If you like today's content, come join us, or if you have any questions on today's content, come join us at GammaEdge.us. Click on the pricing tab once you get there. Once you sign up, that'll get you into the Discord. 14-day free trial, all the tools turned on. We have a lot of charting tools. Just added a new service also, which can be somewhat useful. GammaEdges with an S at Twitter. Ask you to follow us. And then, of course, here on YouTube, if you like today's content, let me know by smashing that like button. And, of course, subscribe to our channel so that you get notified next time we post something. So with that, I'll leave everyone for today. Hope to see you in the Discord. Make it a great week, everyone.